Glen Wood, head of sales global at Mitsubishi UFJ Morgan Stanley Securities, joins us out of Tokyo. We still have our guest host with us, Rajiv Biswas of IHS Global Insight as well. Glenn, is this really a case of Japanese corporations lowballing, being uber conservative as they normally tend to be? Or have we already come quite far in light of the expectations of what the BOJ might do?
Hi, Chloe. Hi, Cody. It's good to be back. It's a great question, Chloe, and I think it's a good time to be asking that question at this time when we are seeing some correction in global markets and concerns in Europe and whatnot cropping up again. I personally believe that we are on track and that Japan has turned a corner, and we will see corporate earnings doing much better over the next 12 to 18 months, especially with in light of the yen that we've currently got. As Cowley highlighted, we're 10 yen above where most companies are estimating, and Japanese companies love to be conservative. On top of that, we've got a Bank of Japan which is saying they're going to do whatever it takes, and I think that is the key phrase.
Glenn, let's say that this approval rating for Shinzo Abe stays at this level, which is really phenomenally high. It's about 70%, right, up to the election, and this is the event that they're all gunning for. And let's say they win big again, like they did in December. And they have a free hand if they are able to do that in passing legislation. From an investment point of view, what kind of structural changes do you want this government to embark on to ensure that this euphoria is sustained?
Yeah, another great question, Cowdy, and I think there's a number of things that investors are looking for. And I also think it's ironic, you mentioned, and everybody's excited about the Japanese market, but actually a lot of global investors, I think, are not that excited about the market yet. They're actually sitting back and saying, show me to Japan. Last time, as you know, we had Koizumi and Takenaka, and they talked a very good game. At the end of the day, they executed very little. So it's going to be very key to see exactly what Kuroda and Abe and Aso and the likes are able to actually execute in this environment. And you're right at this point that approval ratings are very, very high, and those can drop off very quickly, as we've seen in the past in Japan, which can lead to political change. I think they are going to execute. I think we're going to see a sustainable weaker yen. I think they're going to look at specific projects, specific areas where they want Japan to be competitive going forward and invest heavily in those and put regulations in place that encourage those. I also think we'll see TPP coming to the forelines and the forefronts of discussion, and that will also be very, very beneficial for a lot of corporate Japan as well as for the average citizen, I believe.
So, Glenn, are you saying that there's very little foreign institute, fresh money coming into the market? Because that's what one of our guests was talking about last week as well. I mean, we've seen this rally, but he's not really seeing the flows, new money come in. I mean, if they do start to trickle in, what kind of sectors do you think are going to benefit the most?
Yes, I agree with that, Kaori. I think that many institutional and large global investors are sitting back. They invested last time with Koizumi and Takenaka only to be disappointed when things were not executed as they had hoped. This time, I think there's a lot more caution and a lot more pessimism and people sitting on the sidelines saying, show me. Those investors tend to be very bottom-up fundamental investors. So when they come to the market, I would expect to see not necessarily the high brand names and the large blue chips being the largest beneficiaries, but I think behind those there's a huge section of Japanese stocks that are the small mid-caps that are really the grassroots of manufacturing in Japan. Well, I'd love to see companies like Square Enix, for example. It's a company that, if you look historically, it's disappointed investors over the past 10 years, and it's a company that I think is turning around. Other companies, you might look at Futaba, for example. Futaba also has been quite disappointing on the back of OEL not advancing as quickly as people had hoped for. I also think companies that are owner-managed, I've spoken about them on this program before, but I love companies like Hoya and like Nidec that have very strong managers and have a large percentage of the shareholding of the company is held by the owner who's managing the company. These companies have a lot of incentives to improve and to grow going forward.
Yeah, any of these companies, you have investment banking relationship or holdings in them?